Hey, good afternoon, everybody. This is the professor with Day Trading for Success. So in this video, you can expect to see some lessons about what scalping is, how to set up support and resistance levels to scalp every morning. And if you want to scalp along with me every morning, I trade live every morning. It's absolutely free to come in and watch me scalp. You can scalp along with me, or you can do your own thing and watching it. And remember, I am not a licensed financial advisor, so if you attempt to scalp along with me, you really should speak to somebody licensed before you try to emulate anything I do. It's a lot of years of practice. And although it might seem very simple to make a lot of money very quickly, you really have to approach it slowly, trade in a simulator first, only trade with money you can afford to lose. But that being said, so you can expect to see a lot of stuff coming up here about what scalping is, how to set up your charts to scalp, and learn about what scalpers look for to get in out. Then you're going to see some live trading examples that just happened this morning. So stick around. It should be entertaining.
Welcome to Day Trading for Success. Every morning, join the professor, a former math teacher turned pro trader, and watch him trade live for free, sharing proven strategies, breakthrough indicators, and lessons from essential trading books. The professor is not a licensed financial advisor. Consult a licensed financial advisor before following any demonstrations you see here. Subscribe now and click the notification bell so you never miss a live session.
So you can see here, you'll see this is kind of the layout I have, where you have the clock up here, and then the date over here, and then I have a ticker that goes on down here, and then also down at the bottom, but also I'll have another ticker going when I'm live trading, which you'll see that's telling you the positions of the watch list and the stocks. But this is a thinkorswim sort of a teaching layout that I have. When you see me trade, it's going to be a little different than this. Again, I'll have some examples of that coming in. But let's just talk about scalping for a minute for those of people that might not know about it. And of course, if you're watching all my videos, you're moving along with me, you know that this has got the timestamp, so you can go right up to the recap of today's trades if you want to. But you never know, you might pick up something here. So this is a 1 minute chart on this layout. This is the volume down here that you typically see. And then if I zoom in here, now I'll have a lot of videos that give you free layouts. You just got to look for them. A lot of videos that show you how to build your own layout on thinkorswim, and a lot of videos about charts, support and resistance, indicators, just about everything you can think of. There's individual videos or group videos about that stuff that I recommend that you check out. But let's go right into what scalping is. A lot of people don't really understand. Now, I scalp on a 1 minute. A lot of people will scalp on a 5 minute or a 15-minute chart. I do it on a 1 minute, which means 1 minute time increments. There's going to be a new candle showing you where this price is. So it's following the price over here. So you're going to watch it go up or down based on the price. Now, what a scalper does is they're just trying to get in a move, right? And for just a few cents, 5 cents, 10 cents. They go, if they want this move to go, this price action to move 10 cents, right? This is NVIDIA, which is about to have its earnings today announced. Then if they have 100 shares, they're going to make $10 on 100 shares in just a few seconds. So that's what scalping is. You go in and you go out. You don't need to do it with hotkeys. You can do it with buttons. They have a nice, active trader here. You just push buy, sell. And then you can see all the different prices. This is the level 2. You can see all these people waiting at these different prices. You can kind of see what's coming up the pike. And then you multiply these numbers by 100. This is just the way thinkorswim is. And I really like using this because it's totally free to take every single trade. You don't pay anything to take trades on thinkorswim, which is outstanding. Now, everybody has to pay a tiny fraction of a cent exchange fees for things they take. That's everybody, no matter where you trade. But this is not a platform that charges you to take trades. That's why it's so popular. And then most of the people I know trade here. There are other platforms I trade with too, but I'm not going to go into those today. But the whole idea about scalping is you're watching the price action. You're watching to see if volume picks up. You're making a decision. And there's a lot of things that might help you make that decision. And we're going to break into a few of them right here in just a second. But just to give you acclimated with this setup, this is a 1 minute chart. This is a daily chart. This is a 5 minute chart. This is the active trader, and this is the level 2. This is pretty much what any beginner trader would need, to just say like, hey, let me take a trade on a simulator and see if I could have guessed that price action was going to go up. And when I say guess, you want to take educated guess. You want to have the probability that the trade's going to go in your favor. Now, how do you get that? How do you get the probability that the trade's going to go in your favor? Well, there's a couple of ways. Okay, there's a couple of ways to do that, and the whole idea, and you can read lots of books on the subjects. You're looking for an edge. You're looking for anything when you figure out that you want to just get 5 or 10 cents on a move. Which way is the stock going to go? Which way is the price going to go? You can never know for sure, never 100%, but you can get pretty close. The more and more you trade, the more and more you can see which way it's going to go. You can see the future that's about to happen, the probability of the direction, just the probability. You could always be wrong, of course. So that's when it no longer becomes gambling. A lot of people that don't understand it just go like, well, how do you know? Well, I just got a feeling this is going to go right back up again. Right now it's going down because it's red. When it goes up, it's green. It's just about to go back. I got a feeling. I think it's going to turn around. I'm going to go in now. That's gambling. When you have a feeling, that's wrong. If you have an intuition based on knowledge you can't articulate, that's more like trading. That's not a feeling, right? But let's talk about one of the most important things that help you decide when to turn around. I'm going to open up a day, or to decide when to go in or go out. I'm going to open up a day chart. This is every one of these candles represents a day. So this is a great distance of time here, right? I guess I'm as far back as it goes on NVIDIA, the way I have this chart set up. But you could go back even further. This is for 1 year. I could go back like 10 years here, and then look at this. I mean, pretty much it had no action when it was just a gaming company, right? Gaming chip, but it's been going crazy since back here in 2022. It started to go up and go crazy here, But anyway, how would you decide if on a whole day, if you're doing a big long swing trade and you weren't going in and out every couple of seconds, but you were waiting for a couple of days or a couple of weeks or maybe a couple of months or even a year? How would you decide where to go in and go out? Well, a lot of people would do what they call a support and resistance level. So you say, hey, the price action came up to that price and it turned and it stopped there. Let me make sure I've got that. And then it turned around. So I'm going to mark that price and see what happens, and then look, it did it again here. I mean, not exactly, but it did it again here. It went up. It did it and almost hit it and went up. Did it again here and it went up. So that would be a support level. Now, pretend you didn't see any of this future. You just marked it right here. And you would think, hey, is it going to hit a resistance as it goes back down, or is it going to go up? But this is historical data. Another way you mark historical data is you do retracement levels. Let me add a button here. I mean, a trend line is what I meant to say. So you do a trend line. Now, I put my tools right on my chart here. So if you were going to do a trend line, you'd want to mark a trend. You'd want to see, try to hit as many places as this can hit. So if I started it here and I swung it up and I hit it here, but maybe you want to hit it here. See how it hits there? Now, when it comes, see, it went down, it went down, came back, almost went down, came back. Hit here, rejected, then it came down again. So it's close, it's not perfect. So when this is about to hit here, if it wasn't NVIDIA and it wasn't earnings, this might be a support to go back up. So basically, the more data you get, like for instance, if this was here and this level, and I'm not going to do a real deep dive on this because we're going to get into other things here. But like if you were to do something like this and you had marked that like here, and this price action was coming down, and I did that wrong, actually. Let me do it again. This is what I'm trying to do. So let's say do something like this. And for whatever reason, you put that trend line right there, and because it was tapping here a bunch of times, and then this trend line was right here, and this pricing came back up here, then you would be more inclined to go, hey, that's a serious floor. That's a resistance. Respect that level. So that's just one way to try to get an edge to decide which way a stock's going to go up or go down. It may work. It may not work. A lot of people would swear by it, right? But you can't be 100% count on it. So when you get into the 1 minute, you're looking for those levels too. There's a lot of different ways to find it. We're going to break into other things you look for on a 1 minute chart. But you start in this strategy that I show every single morning. I'll show you what I do. So we have a 5 minute chart, okay, set for 10 days. So I'm going to tighten this up so that these bars come over a little bit closer to the right. I'll just put 10 candlesticks back. So it's just 10 back from the end. So we see more now. Now I'm going to auto zoom so we have the whole 10 days. Now again, I have a lot of videos that show you how to do all this on a chart. But I'm looking for the high and I'm looking for the low now because I'm going to mark some historical data. So the Fibonacci levels are considered to be nature's mathematical formula, like every leaf and all kinds of things in nature follow certain math as they grow in the way that and those are the Fibonacci levels. So many things, and seashells, and you can look it up and read about it. So that's about, if you go by marking Fibonacci levels on a chart, mathematical formula, that's about as historic as you can get. So based on back testing with many professional traders, a lot of Fibonacci levels for short-term day trading and scalping are marked on 5 minute charts. 5 minute charts, 2 days back, 10 days back, 5 days back. I start with a 5 minute, 10 day back. When you mark a Fibonacci level for support and resistance only, remember this is a specific scalping support and resistance. There's all kinds of ways to trade Fibonacci levels, and I recommend you read books and watch videos about that. This is the specific scalping strategy that thousands upon thousands of traders use and do. So this is not a proprietary thing that myself as the professor has. I copied this, and it's done in a strategy. It's in a very popular strategy called the RV strategy, which was a book that came out in 2022, actually called Day Trading Volume 1, because it kind of started all that large cap scalping movement. So I highly recommend that book. I have 6 or so books I recommend. That's one of them. I have links to them. But we're going to mark this Fibonacci. This is how we start, right? So we go right into, we check this. I'm going to do a double click. I'm going to click once, and it'll hold this level. So I look over to this side, and you can see I'll get the price I want. So I want 183.97. See how I clicked it there? Now I'm stretching it down, and I'm going to go over to where the low is. I got to kind of turn the wheel to move it over here in this case. Okay, so I'm going to go ahead and hit this spike, which is at 168 even. So now I've marked Fibonacci levels. Now you might ask, why are these going to be helpful? Can you see if they're helpful? Well, they've created channels. Just to start off with, this is our very first historical data, right? So they created these channels in here that you can, for the most part, expect them, not always, expect them to be respected. See how it bounced in between here, bounced in between here, here too, here too. I mean, they break it from time to time, so we're going to try to narrow that down so those don't throw you off. But we start with that. This is how the strategy starts every morning that I trade. That's why I'm showing it to you, right? Okay, so then I go to a 2-day, and I mark the Fibonacci on a 2-day level. And that's way easier. There's the high-low. So I'm going to go ahead and do it again. So that's 176.57. I look over to the right. I get to the 57, which is sometimes a little bit of an exercise to get exactly there because it's very sensitive. There we go, 57. Drag it up to the 183.20. Pull down a little to that level. There it is. Now I'm going to make that a different color so I know that that's a 2-day. Again, there's tons of videos on how to do all this, guys. Now I've marked a 2-day. Now let's see how those channels have helped us out. We'll go back. So we'll go back to it to make this 10-day again. Now you'll see that on the layout that I have, it'll be a lot different than this. This is just sort of to show you what's going on here. So now what did that do for us? Did that define the channels a little bit better in the current price action right here? Because now we're really current, and it sure did. Look at this channel. Look at this little tiny channel with the other fib and this fib making it, and then it tapped and turned around there. Look at it here, tap, 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 turn around. So it's really giving you guidance as to when that stock might turn around. These candlesticks are showing you when the price action, which the candlesticks are marking the price action up and down, they're showing you when the price action might change. So you look on a 1 minute chart, right? Let's zoom out on this. This all we have so far is just 2 Fibonacci levels showing you. Look at that. Look at that mark. Boom, down, up. So, or is this the actual place I marked it? No, I didn't. I marked it back here, right? Oh, I don't know. And I can't tell if that's where I marked the 5. I was going to say that's not too. No, because I wouldn't have marked it on this day. All right, I'm not sure now. I have to look. Sorry, guys. Usually don't go backwards and mark it. No. So I marked it from this high down here, low to high. So I didn't mark it on this day, which look how it respected. I just wanted to make sure it wasn't actually respecting exactly where I marked it. I did mark this level, however. But did you see how it just picked it up perfectly? So, that's why people mark these levels. That's why historical data in back testing is why it showed this strategy worked, is how the strategy was developed. You mark historical data out to give you backbone when to go in or get out of a trade, because it's showing you, here's the spot based on previous timelines, based on stuff that happened in the past. It's going to repeat. A lot of the times it's going to repeat. When we're trading stocks, remember, historical data and price action is all we have. We don't really get to see the future, but the way successful traders make money is by predicting the future. They predict it, and it's not a guess. It's not gambling. It's probabilities in their favor, mathematical probabilities, which really aren't that hard to learn once you get into it. Now, I've taken you a long way already to marking something up if you didn't even know how to trade, if you didn't know what scalping was, if you didn't know how many cents to go for, if you don't know about layouts. You could be completely lost here. I recommend you watch other videos or just replay this again, because it's pretty exciting and pretty easy to make money if you can control yourself, which is the big thing. It's a big thing. Couple of books about that. One of them is called Trading in the Zone, Mark Douglas. I have a link to that. Another one is called Best Loser Wins, which is Tom Hogarth. And then, of course, the Day Trading Volume Series, Day Trading Volume Series 1 and 4, particularly about trading the breakouts at the open, is Day Trading Volume 4. That has a lot of psychological, how to control yourself and how to get over where a lot of people get a block. I mean, our brain is 6 million years old or whatever, this brain, and it's just like it's set for like fight or flight. It's not set to trade in the stock market. So you can't tell the difference of a trade going against you or a bear or a saber-toothed tiger about to attack you. Your brain doesn't know, right? So there's all these tricks to get over that, where you learn to follow a day trading plan. And, I'm not going to get into a long day trading plan here, but read the books, guys, because where you can trading, the 5% that are very, very successful, the 5% of the people that are very successful in trading, they control themselves. And then it's really easy. You make money. It sounds so easy to control yourself. That's where everybody goes wrong. It's not easy to get out when you've reached your maximum loss per trade, to get out when you reach your maximum loss per day, to just get out of a trade that's not working for you for whatever reason. Your mind convinces you that you can make it work for you, that you don't want to be wrong. And again, I'm not going to break into, there's a lot about that, how you get hijacked, how your brain literally hijacks you and you lose money. So Trading's really easy if you get over yourself, if you control yourself. If not, it's horribly hard, and that's why you hear all the nightmarish stories. But if you follow a strategy, and probability and outcome the probability and outcome is your friend. The probability will make a good outcome for you if you pick the right probabilities. So you start, like I said, with these historical data on the Fibonacci levels. And now we're going to go a little bit deeper here, even more confusing. Now, a lot of traders will tell you, you don't need to do any of this. You just know the levels to get in and out at, right? Well, let's assume you don't. Let's assume you don't. How do they know, all these professional traders that make so much money and try to, here's one thing you can take to the bank, right? If you have somebody that's giving you a hard time about what you do, they are an unsuccessful trader. Just write it down. Because successful traders know how hard it is, and they never judge other traders. They don't judge other traders. So those nasty people you see on YouTube and wherever you might get it, nicely comments and wherever social media you're on, and they're maybe giving you a hard time when you're in a learning curve and your learning process, they're not making any money. They're taking their anger out on you. You don't find successful traders that do that. I've never met one trader, unless it's jokingly sarcastic with their friends. That happens every day, like what an idiot move you made, But I mean, to really try to cause harm to a trader by saying nasty things like that, they just outed themselves. They don't know how to trade. So you can take whatever they say with a grain of salt and just kick the can down the road and don't listen to anything they have to say. Means nothing, right? Now, they may be parroting lessons that are worth listening to, But back to the point, everybody trades differently, and you need to find your way that works for you. Most people start with marking historical data so that they can remember. They trade in a simulator so they can remember how to where these levels might be to give them a better probability, a better edge to try to get out at the right place, right? Look at how the fib that was marked here. Look at how it just went right here, way up here, when it was marked earlier that day, and then it just did all that. Why would that be a nonsensical level? My God, it's not right on the penny, but it is close. So remember, it's you respect the levels till you don't. That's in Day Trading Volume 1. Respect them till you don't, and then just get rid of them. If they're breaking the levels, just get rid of it. I wouldn't get rid of a fib. I'm going to tell you the ones that I think you should get rid of. So what else would you mark here? Now, typically when you mark other historical data, and I'm going to put some support and resistance lines like I just did on the day chart, right? So when you're marking historical data, you kind of want to mark it near the price action of where you're trading. So NVIDIA is way up here at $181, right? And if I'm starting to mark stuff down here, the chances that it will ever get anywhere near it today for day trading is pretty slim. And most likely you're going to do new levels every day. But let's just say there's a chance, it got pretty low here from the open. Here's the opening. This gray area is pre-market. This line in between decides when it's post-market, after the market closes from 4 to 8, and then from 7:30 to, or 4 a.m., I'm sorry, to 9:30. This is Eastern Standard Time in the United States. So that's the pre and post market. This is where most of the action happens. The volume is in the open sessions, which are dark here. So you can see it opened right here and then shot straight down. People were taking profit here. And then something turned it around. Gosh, do you think the fib was, maybe one of the reasons that so many thousands upon thousands upon thousands of traders marked that exact same level for support? Yeah, they did, guys. So you can't count on it, but it's good to think about it and go start marking them and then look back. They have a great tool here called On Demand. We can go back in time and you can even trade those dates, and it can be a lot of fun. But just go look on it, mark them out, and go look on your charts and see, did these levels mean anything? And 9 times out of 10, you're going to see they really meant something. But going back to support and resistance levels, so I would look at a previous day, right? And I would see, where did the price action abruptly turn around? Again, this is not me making this up, right? This is thousands of professional traders over many, many years that mark support and resistance levels. Now, granted, Day Trading Volume 1 does have a specific strategy where they really honed this and tweaked it. And I'm going to show you how it says to do it, but it's not a brand new thing. I'm not trying to claim it as my own. But what you do is you look at an open session and see, hey, it abruptly turned around. I might want to make a note of that. And then you go across the rest of the day and you say, did it do it again? It did it again here. It did it again here. It did it again here. And then rather than mark just the peak of that level, you kind of pull it down across the day and you do what they call smoothing, and you smooth the general level so you're getting more areas. You know, you're not trying to get the actual peaks. You can see that it kind of hit it here a bunch of times again too, and then it kind of peaked here on that day too. So it continued to hit it. And I was actually only looking at these three levels, and look, it just did it again. So now that may have broken and used that as its support, right? But this is how you mark historical data. Now, I don't, most traders, not just myself, don't give as much value to the post and pre-market, but sometimes you can mark them if they're so abrupt and sharp. But I definitely would mark something like this in case it ever got down here again. I'd smooth it closer to the bodies right there, and I'd mark that, right? And then I might mark this and see, did it hit? Yeah, look how it went across here. And picked it up right down here again and turned it around in this area. The fib was its final spot where it went boom, right around. So these aren't going to be to the penny, but they're going to tell you, most likely, get ready. Nothing's always. Get ready, that's a point you might want to watch. Look at this peak here, and then how it hit here. The next day, guys, that's the next day. And then hit here again, right? So they repeat over and over and over again. So never let somebody tell you that you don't mark historical data, or at least write it down if you're a good logger, which I recommend you are logging, and you make a trading plan and you have those levels marked out so you know. I think it's easier to keep them on a chart. Some people go like, oh, that's too messy. But look, it depends on what chart frame you're trading at, right? So if I'm trading on a 1 minute chart, I need to really see these candles, right? So they're not going to be this small. Hang on, let me get this to work right. They're going to be way bigger for me, right? So I can see them. Gee, is that line in my way? I don't think so. That line's not in my way, guys. So, knowing where that is, look at it here. Tap, turn around, tap, tap, turn around, right? Finally broke through, and that's kind of telling you like, hey, it's good to go long now. It broke its resistance, and look, it just swelled right up. So this is just common sense, a common sense way to mark data. Now we're going to go a little deeper. That's historical data, and you'd want to use that as one of your edges, one of the things that you use as a probability that the price action is going to go your way. Because remember, every candlestick is a price here over here. So, it's moving on this chart. See it here? So it's just this price moving nice and deep here. This is what most people see, just this line across here. This is what's called level 1, just those two prices, bid and ask, right? And this is level 2. This is all the people waiting down the pike, waiting on the book. It's all here, waiting to go here. So, you can see how thickly traded it is, how many people are waiting at a price, if they're backed up at another price. That's a whole nother thing to figure out how to read, and we'll touch base on that a little bit. And you'll see how I call it out when I'm live trading if you go up to the trading section of this video, okay? But this is historical data, and I still, trading live, get questions about this, and I keep getting a lot of new people, and I keep forgetting that I'm getting new people, and they're just learning about a candlestick for the first time. So I forget as you get involved, and I used to be a math teacher, but as you get involved in what you're doing you think you're talking to people that know everything. You get used to that, and we got to rewind and go, wait a minute. Most of the people, which are constant turnover coming in, are new. You're not the only one. If you think everybody else knows, it's just you that don't know. No. They're just pouring in every day. Over 8 million day traders now and climbing. They say retail trading has taken off, and I don't see it going backwards. They're changing the rules now in the SEC I'd say to be better for day traders, but it's really to have the market makers who help you get your price fill make more money. That's why most brokers aren't charging trading fees anymore unless they offer you something really special to get those trading fees, because they make money off of every trade that happens, no matter what. You don't see it. They take it before you see your profit or loss. It's all wrapped up in their high frequency algorithms. But the SEC, they want there to be more day traders now. They used to be bothered by them, and now, so they're changing the rules. So you're just one of a huge, massive crowd, if you're new here listening, that's going to be pouring into day trading. So the faster you learn these basic concepts, and you may only want to trade on a 5-minute chart. Maybe this is too fast. Once you start trading on a 1-minute chart, everything else seems so slow, right? If you're only trying to get 5 or 10 cents or 15 cents, it's going to happen on a 1-minute chart. If you're going for 50 cents, $1, $2, it's more likely to happen on a 5-minute chart. So that would be a different way to trade. But once you get into here, this actually seems like it's moving really slow. See how slow that candle's moving here? This is a time of day where our volume isn't very high, but still, you'll get used to it, and then everything else will be slow. But anyway, let's break into a little bit deeper here. Okay, so welcome back, and boom. So if you're new and you seem like that last layout was confusing, this is going to just blow your mind. So stick with me here, and just as a lesson on understanding how to read price action. Now, this is an advanced layout with custom indicators that are used on prop firms where people that make millions of dollars a year use. So they have learned that there are ways to read price action faster if you have the right indicators. Some pros don't use any indicators, and they just naturally see what's happening and they trade that way. Those are the few, but there are some. Others will use indicators, and then they will use maybe one indicator or maybe 20 indicators. So when you start to learn how to trade in a simulator first, if you're new, and then you'd want to just pick indicators that you're finding a hole in your data, like, why did I miss that trade? If I only knew the volume was about to go up, if I only knew that it was going to go up when the price stock was going up, I would have known that a lot of people are going up with that stock, and I could jump on that stock with them. If I'd only known that, now it might be an indicator that would be helpful. If I only knew that stock was about to stop going up, when is it usually going to stop, so I know when to get out of that trade, that might be an indicator that you'd want. If there's only knew that there were other historical data levels that could be marked and be maintained on your chart for any stock when it opened up, like it just knew an historical data for that stock, boy, you'd probably want to know that too, right? So this is what I'm talking. I don't want to sound patronizing, but I mean, this is what goes on in the minds of professional traders, step by step. They all went through this, right? So we're going to run over pretty much all the big indicators, and I use them every morning to show you guys. Sometimes when I'm trading on my own, I don't have them all because I don't need them all because I've been trading a long time. But I do understand the value of them for a quick take on what's going on. So we're going to go into these indicators right now. So again, if you already know, you just want to see the recap, you can just go right into the trading today. But I'm about to break into what these indicators are. So the first question you might have, now this is all still the same, except I have a 15-minute chart down here below this level 2 you saw earlier. I have the news over here. This is still a day chart down here, right here, minimized. Okay, this is a 5-minute chart that we opened up for the fib. This is the 2-day one. Remember how I changed it? All right, this is a 30-minute chart, a 1-hour chart, and a 4-hour chart. So when I open up any one of those, they're going to have different data, and they're going to let me see different support and resistance. And a lot of times I use those for particular strategies, right? Like an existing strategy is in Day Trading Volume 4 is called the breakout strategy. And how that works is the last 30-minute candle, which would have been this one, and to see how they're marked already, you mark the high and the low of the body of that candle. And when the price action breaks that, a breakout, you go up. See how well it called that? Boom, right? And then these other levels will tell you when they break it again, you go up. And then you might have more levels here to tell you when to get out. But here you would have probably got out at the fib. This is from Day Trading Volume 4, and it's called the Breakout. It's called Trading at the Open, but it's from Day Trading Volume 4. And it has specific guidelines for all 4 different breakout strategies to look for. So that might be some historical data that you mark. It's literally historical data if it happened 1 second before or 5 years before. It's all the same thing. Some people just say data. I need data. I need to know when to get in and get out. I need to know data. And these right here might look nonsensical on a 5-minute chart. Why are these floating here? But these lines right here are lines I actually drew while I was trading today on a 1-minute chart, intraday historical data, to help me just a little bit more of an edge. So that was a little bit more about historical, but I wanted to make sure you understood why we have different layouts here, different setups here. So let's talk about what I believe is the most important indicator if you don't already have it. And this is the Scalp Meter Pro. Now there's a lot of versions of this. And what this does is it tells you it's better than just those volume sticks that you saw below on the other charts. This tells you what's happening inside the candles, how many buyers, how many sellers, how strong are they. A meter even shows you like the sellers are taking over right here and the candle's going down. I equate this to like you're on a surfboard, you're on a wave, and you're on a surfboard waiting for the momentum to shift. You're waiting for that wave to come in. As soon as you see the momentum shift, like 100% that just happened there, 85, 91, this just shifted to go up. You jump on that wave, right? And then you get off before you hit the rocks. There's ways that tell you when to get off, which we'll talk about in a minute. But that was almost a no-brainer, perfect. Because of this indicator, I would have known when to get on that trade. I wouldn't have had to guess as much or use my intuitive power based on other things I'm seeing. This literally told me, right? So this meter has more information on it too. Like there's the VWAP marked on here, which is a red line. This is the VWAP, this red line, which is the volume weighted price action right here. And this is telling you basically the current value of the stock at any given moment, although people usually just use this as a support and resistance. And I can only go so deep. I could make this a 5-hour video, but this is showing you a crossover that the 14 moving average, all the moving averages are, guys, when they say you see a 20 or a 9, that's how many candles back. So 14 candles back on a 1-minute chart. That's the 14 moving average on this. That's what it's in this chartreuse color. So it's averaged out, smoothed out the last 14 candles back, and it's telling you this is about the average price of that out of all this action, right? So when the gray is a 9 candles back and the green is 20, all EMA moving averages, 9, 14, and 20 EMA, right? So these crossover, when they cross over each other down here, make moves, you're showing the indecision or decisions that traders make. So you want to know about that. You want to understand. Now you could really dive deep and say, I know exactly when that gray line passed that green line, things are changing because that's short-term action. The green line is 20 candles back. The 9 is only 9 candles back. And now the latest data is it's moving, it crossed it, price is going up. Okay, that's an easy way to do it. Or you could just have an indicator tell you. I mean, that's not so easy a way to do it because you're looking constantly, having to look. This tells you when it crosses. And if it's still moving up over the 14, it's still going up, right? This tells you the last volume of that candle. This tells you if the current volume is faster, higher. So whatever way that candle's going now, that means there more people got into that move. See how it went to 100%, and that's we'll get into the patterns in a minute, but that basically said, jump on that move. It called it right there to go down if you trade short. It called it. So this shows you what's inside the candle, and you can even get into reading, the pattern of just the volume, which is the blue column. Hey, what's the volume overall pattern? There's different ways traders read this. This is the overall volume for the whole day. I have a link to this. This is short money. You can definitely, if you don't have one of these scalping indicators, you need to get one. But this is the cheapest one I've found. The cheapest one that there is $24.95, and it has the most data. So I would get that if you don't have it. Now let's talk about they sell these together. A lot of people do on their different sites. That people that sell these, and you could probably find a lot of these for free if you shop around enough. But if you want the ones that will back up their product, you'd better to just go to the link. What this does here, this is called the risk oscillator. So this is showing you the last 9 candles, how far they moved and what was the direction that they averaged. They moved, right? Green was up, red is down. You can pretty much see them here. And the last 2 red, and then this one's green. See it here? It takes an average, smooths it out, and says when you go in on a 1-minute candle time frame, you only want to try to go 4 cents up. When you go short, you only want to try to go 3 cents down. Now this is moving very slow right now, and that's why normally you'll see these, 12 cents, 15 cents, 30 cents, And the more disparity there is between them, the more beware if you're going the direction that's not the way it has the higher number, right? So this is only 1 penny apart, but you beware that it's probably going to turn back around, But you have to look at other indicators. But this tells you when to get in. This helps you when to get out. It'll show you how many pennies you've moved, and this shows you how many pennies to go. Then it shows you your actual position. So now what we're looking at right here is with these green and red arrows right here. It's getting confusing with all these lines, I know. But these green and red, you know what I'm going to do? I'm going to get rid of everything else but the indicators now, okay? It'll make it a lot less crowded for you. Okay, so if you have no historical data now at all, right? Now, you're going to want it, but I'm just going to be easier to explain. So this is called the market magnet, and this is tweaked. Now, there's a way to get pretty much this exact same thing on Thinkorswim for free if you know how to do your settings and everything. It won't be quite as good as this, and it won't have... it just won't be as good for a whole bunch of reasons. But this is showing you 50% of the overall price action volume. This is showing you the volume of the price action where most of it has been is at this level. And this shows you its range, 50% of its range. So particularly set for large cap and mega cap stocks, this works really well. You want to make sure you have this set for today, not one day when you do this. If you get this indicator, I'm pretty sure it says it all over it when you get it. But that's how you can read this. The shaded area is where the price action would happen. And then if you go in here to read this even better, you're looking for these. See these lines right here? Right now it's kind of dead. But as these lines, this is the most recent price action above and below. See how they're moving? So when they're moving across and they're above it, then most of the time it pulls this magnet up toward the more recent price action because it's averaging it over the higher volume. And when it's down, it goes below it. This is a highly used indicator, and this works as a magnet where the price sort of always gravitates to. Now, remember, all this data has already happened, right? You don't get anything that tells you the future, but it's about as good as you can get, to tell you the future, right? So look at how it's just staying here, right? So now you're outside the range. It literally turned it around here without any other indicator, right? And nothing is pulling it up right now. You don't see those blue lines coming up. So if you were just reading the market magnet, an upward move here is kind of weak. It's kind of weak right now. I would be worried about going long if I was just reading that. I might look at other indicators like this was right at the top, but then the volume overall dropped. See how it went down? So you learn to start to read these things, right? And you want to trade with the crowd because where's the crowd? This is the crowd. This is the crowd. This is the crowd. Everything's the crowd. It's everybody else, right? Everybody else makes up how this moves. It's interesting. You read Tom Hogarth, Best Loser Wins, says, don't trade with the crowd because 95% of them are wrong. It's right. Only 5% of day traders make it. So that means 95% of them are wrong. But in the particular instance, see, that's what I was meaning. I wouldn't have gone long. Look what happened. The magnet rejected it. But and it even broke the volume going down. So it jumped on quick move. Let's just say you would have read the magnet. You got in $230.01. You're down now 10 cents, 100 shares, $10. Boom. And that all happened in a 1 minute candle in really like less than 30 seconds. So you would have had, and if you had 500 shares, you would have had more money. So you can judge how much you make or lose if you're wrong based on your share size. So this is the crowd. So the crowd, trading with the crowd is important. And why I'm on that, you see this line right here? That's marked at exactly the whole dollar. So and you can either draw these yourself, that's at 50 cents, these lines, or you can get a script, which I'll show you in a second, that will put them on every stock that you open up. And why would you want these? People psychologically go in and out at whole and half dollars. Oh, I'm going to get out when it gets to 230. I'm out. I'm going to get in when it gets to 230 and 50 cents. That's my entry. It's easier for them to remember. So that's where a lot of action happens. As stupid as that might sound, we are dealing with our species, which is a creature of habit, and we want to trade with the crowd. So this is another particularly handy one for reading short-term price action. Actually, that's good for anything. It's not like you couldn't see this, but when you're reading support and resistance levels, when you're reading other indicators in price action, why not have it right in front of your face? It's a wall here. It's a ceiling. It hit here. Then it became a floor. Then it became a ceiling. I mean, it's a level that's respected along with the magnet. So you're going to want to watch it, right? And this is very slow moving. See how it's gravitating toward the magnet again? Now you might ask yourself, what is that green arrow? Why is this turning it around? See how it turned it around there? This is another indicator, right? This is called the buy-sell oscillator. And what it does is it computes these crossovers for you, right? Tweaks them on a time basis and then says, hey, it looks like things are about to happen. You should turn the other way. This one is right probably 65 to 70% of the time. So that's better than 50%. So I would take it. That's based on back testing. Now you had a contradiction here. This is a momentum indicator here that judges momentum, usually used for much faster scalping. I have that on this when I trade right at the open right now. I wouldn't respect it much. I would more be inclined to watch this twice. It worked here. Is it going to do it again? You're also getting a floor at the magnet here. So would this turn it around? Is that enough data? I'm not looking at anything else right now, and I took away the historical data. Is that enough to make this go green? I'm not sure. It looks like it is. I would like to see other data. But that's the buy-sell oscillator. Now, this is the MACD, right? I'm sorry, the buy-sell oscillator is not on, I got that wrong. This is on a relative strength index, whether it's overbought or oversold, tweaked for scalping. This is done on EMA crossovers, the MACD. And the MACD I find to be far more accurate. This is 85% accurate. When you see that arrow go the way it says. Remember, you take your own trades, but it was right. And then it stopped. So you have to be careful. I mean, actually, yeah, it said go down from this level, and it was very right. For a minute, it didn't. But where it said to go down, it went down, So if you went short right there, you would have had a great trade. You would have had a trade that was like 230.03 down to 16 cents, So $16 on 100 shares. Do 50 of those, you're making a lot of money. Again, it said go up here, it went up. So when you see the MACD, they're almost always right. That's a good indicator to get. And the buy-sell oscillator is not as often right, but I use that to get out more than go in those when I see that. So those are two other indicators. So I just wanted to make sure I showed you those I think that was all on this chart, but let's open up this chart so you can see. So this is inside. So I had the 9 moving average, which I showed you, the EMA, the 14, and I don't know why this is saying Copilot's coming on there, and then the 20, and then the 50, and the 100, and the 200. These are SMAs. These get smoothed, like I was telling you. These just show you exactly the average over 50 days, 100 days, 200 days. They're on a 1-minute chart, but they're showing you the day average. So if I come across those levels on a 1-minute chart, I'm sure going to respect those. A thing to keep in mind is that more people trade on longer time frames. We're about to get into that conversation. So the further back the historical data is, the more respected it should be, right? It's been around a while. So the longer it is, like the Fibonacci, very respected levels. This is the VWAP I was telling you about, that red line. A lot of people trade in and out of that. We're about to talk about this multi-range. I haven't talked about that yet, but we talked about the buy-sell oscillator. We talked about the MACD. We talked about the market magnet. We talked about the risk oscillator. We talked about the momentum. And then this is the multi-chart alignment again. Oh, that's the ATR, and this is the multi-chart. And then we talked about the whole and half dollar here too. And then this is the Scalp Pro down here. So what we didn't do here is we didn't talk about the ATR. So let's get into that. So if you're not overly confused already, I'm going to keep going. So remember, you can just go back and rewind, and I think, and go back to rewind. You can go back to the beginning. And that's the Studio Cat. I'm trading in a studio here. There's a lot of traders that trade every day in here, and we're a fun group that likes to trade. And I trade live, and I do what's called quarterbacking, where I call the trades for other people. So I'll have multiple trading sessions in a day. Usually only one is live, and then the rest are, well, they're live, but they're just not streamed. But I do a lot on Zoom as well. A lot of them are done for people that only trade large share size, and they do what's called alternative routing, so that they always get filled when they use the market maker. And this is probably too much information for you. And what happens when you always get filled is you get a worse price either way. They make more money off you, but they guarantee they're going to fill your share size. So large share size traders want to get filled. They're very confident in where they're going in and going out, so they don't care about $30 or $50. They're going for, $45,000 in 30 minutes scalping, which I have videos that show how to do that. But often, a lot of them I have that show 5,000, 10,000, 15,000. So it's a whole different way of trading for like the people that are used to that kind of risk. But for everybody else, the normal people, you don't want to trade that share size. And here, we're going to talk about ATR for a minute here, what all these labels are showing you here, right? What is ATR? ATR is the average true range of any stock you're trading over a 14-day period. So you take 14 days back, and you figure out its average true range. So this is 14 days right here. So let's just zoom in there. So you don't have to do this. I'm just trying to make it easier to figure out for you, right? So you're looking at that range, and it's going to average it for you, right? Now, you can do this by just right here. It's going to show you. So if I go over that candle like the previous day, because this is today, I go over that candle, and you look down there, right? It says that stock moved $4.61. This little number right here, watch that. $4.61 average, up or down, over the last 14 days. This is a mathematical figured out by a mathematician, Wilders, and most everybody uses it because when you trade a stock, you want to know where it's going to average, what its average might be to go in a single direction, so that you can trade it with confidence and maybe hold the move a little longer. And if it breaks that range, then you know it's truly trending one direction or the other. So it's just more historical data that you need, right? Now, the Day Trading Volume 1 that was for large cap traders came out, like I said, in 2022. They figured out a way to really tweak that for large cap stocks that don't that if you fit the criteria that it says, like not a stock like Tesla that has got a $22 ATR, right? But your average large caps, you want an ATR that's like $5 or below, $5 somewhere in there, not to exceed $5, $6, and then maybe be higher than $2 or $3. So you're getting that sweet spot of movement, $2 or $3 to $5 up or down every day, because you're looking for consolidating between your historical data. You're looking for channels, and you're trading up and down, or maybe just up if you only want to go long. If you're in an IRA account, I know a lot of people are just waiting for the dip. You see where it's hitting the floor of a channel, and then you get in. So having that ATR to back you up is really handy. And on the Day Trading Volume 1, what they do is they take the previous candle and they divide that ATR by 2. So it would be like $2.30 roughly if you did that. And then they add that $2.30 up, and then from the close, and then subtract $2.30 down. And this is where you have your half. That gives you half the ATR. So this is more likely where you would expect the action to move here. Actually, that's way too high. ATR a little high. That doesn't even make sense. I got to read this again. Oh, here's half. I'm sorry. That's whole. Here's half. There's the half. Okay. So that makes sense. Okay. That's $4 apart. So, so anyway, because it's going to be apart that far apart from each other. It's just that that's not the center. The center would only be $2 and something apart from each other. So anyway, then it sets levels. You can see, like if you went up that much, that's the high level, that's the low level. Then if you took the whole ATR, I had this wrong here, this is the whole amount, and you added it to the close, you'd have that, and then you subtracted it from the close, you'd have that. Now, this is going to show you on the 1 minute chart, a full line all the way across. This is just to show you on the day. So you can get this script and you don't have to do the math, and it'll mark it on every stock right up here. So let's open this up and you can see. And then it is historical data that I have not deleted because it is just here. There's the high. That is a serious ceiling if you got to it. And there's the low. That's a serious floor if you got to it. And then here's the entire amount way up here. Now, normally these large caps don't go up here. And if they break that, you already know they're trending. Just giving you some analysis here about how pros read these indicators. So they're all going to have this marked out, whether it's on their chart or not. Every pro knows what the average ATR is of a stock that they're trading, or they're very remiss in not knowing that, or they're doing a style I'm unaware of. But so that's the ATR that was on this. And then the other one that is the multi-time alignment. So this is really important. Now, I just did this whole thing about trading with the crowd. So you see how these vertical lines are going up? And I talked to you about how the longer time frames, more people trade. This is a 4-hour time frame, 1 hour, 30 minute, a 15 minute, a 5 minute, all more than the 1 minute. These are, just look at those squares as representing a chart of those time increments, right? So if you opened a 4-hour down here, that candle is going to be green, and there it is. Okay, so rather than having all these charts open, this is telling you. Now, since you know the traders are biased of the direction that it's already moving, they're usually waiting for something to trigger them in, and then they look for the bias of which way it's going already. 4-hour traders most likely will go long. Right now, all these traders are most likely going to go long. So that's the crowd. That's the crowd you're trying to trade with, so you don't make a mistake. As you can see, it's very, very close to, it's been so consolidating here that all those turned red. I mean, we're right at the edge here of when these would be short biased, all these time frames. These 5 minute, we just passed this 30 minute here, and every time frame below it, we just passed them, okay? So, as we go further up here, you'll see there's the 15 minute again. Now you're up to the 1 hour. So the higher this is, the more of these are making a decision all at once. So having them marked on your chart, it's really helpful to see which way they might go right when it breaks. So you glance over. You can have it on the same chart. I don't have enough room, so I moved the labels here and kept the vertical lines. This is part of the same indicator. This is how most pros do it. They don't want it just gets too crowded. More data, indicator-driven price action data, not historical this time. The ATR was historical. This is price-driven data. So you're looking at this as it's about to break this 5-minute. If it's green and everything else is green, then you start looking at the other stuff for short-term moves. You see what historical data you have. You see what the MACD is doing. Just everything combined. The more stuff that says go the way you're supposed to go, the more likelihood and probability it will go that way. That's all you're looking for, is the probability to take a short-term trade and get out and then reassess again a moment later. And you'll figure out how to assess faster and faster and faster with the more that you trade. So that's really the historical data, and indicators are really what is the difference between a pro and a beginner. Except for, number one thing, state of mind. Number one thing, state of mind. I'm going to show you the day trading plan I drew up for myself, okay? So I don't recommend you follow this. You could trade it in a sim. This is my own. A lot of these you absolutely should do. Set a goal for the day and stop when you reach it. Know your setup before you enter a trade, like we just discussed. Only enter with 25% of your max position. This is a big one, and there'd be no reason for you to do that unless you're planning to add or take away from your position, which I don't recommend if you're a beginner that you even consider doing ever, because you have this problem to overcome first, right? Only add to your position when the price flow started to move back in your direction. So most traders will tell you never do this, and they'll say the guy has no idea what he's talking about. That's fine. I'm used to doing that, if you ask their advice, right? So if I were to take a long trade here and this happened and it was going against me, if I were to add to my position down here, then my price would get way better. It would get way down here someplace where I could have turned a profit. So I'd look at it like I only entered 25% of my position. Then I added down here and my price came down here. Now I just made a whole bunch of money. Get out of the trade, right? That's how it works for me a lot of the time, not all the time. And then I always recommend, if you're ever going to even think about adding to your position when you're already losing money, if you haven't hit your max loss, wait for the signs from the indicators or the historical data that it is turning around. As it starts to turn around, don't worry that you didn't get the best possible position. Just get in, and your price is going to come down, and somewhere here, you can either get out if you're afraid, if you don't think it's going to continue to move because you guessed it wrong, or you wait for the bigger move and you make big money. So if I had entered there, 22 to 29.91, then I added somewhere, say down right here, I would have been at, is that 91? And this is very, very tight, 87. So I would have been at about 89 when I got in for double my share size. So I would have broke even here rather than up here. And then I would have ended up making, if I stuck to the end, 4 or 5 cents. So this is really small. But typically you're making, 10 or 15 or 20 or even 50 cents real quickly. But this is a good way to show you how slow it can be. And you would have got out of that trade. In this particular thing, you're not in much risk ever. But I don't recommend you do that style of trading until you have learned to cut your losses. That's the hardest thing for any trader to use. Log all your trades, make money in a simulator for 30 days with the strategy you want to do. If you're nervous, if you're sweating, if your hands are shaking, it means your share size is too high when you go live trading. It means, go down to 1 share, whatever it takes. Trade that way till you just aren't nervous. Then go to 2 shares and see if you're still not nervous. It's a process, right? Like Moneyball, it's a process, Don't follow anyone else's trades, no matter how excited they are. I recommend that. And do not overtrade to make your money back if you lost. I'm definitely still guilty of that, but I have a confidence level that's, it's hard to match with my confidence. Doesn't mean it always works. Confidence doesn't mean you're right, but I'm just saying I will take the chance. So I just don't recommend it for your average person. Don't do as I do as I say, right? Is that what they say? So, that's generally how the 1 minute chart works. Now, I always will refer to the news as one of my indicators because it's a catalyst. If something's pretty big has happened here, you're going to want to know because you're going to have to add it to the mix. There's a lot of things to look at. And when you're on your day chart, besides just the ATR, I put the social sentiment up here. You don't really need that. It only really matters for the day to help you pick a bias of, I think it's generally going to go long today or generally going to go short today. And then I worry about if I'm going to go over my capital that I have. If I'm on margin, then I want to know if I'm holding it into a swing. And this, if you're watching this, you can go over to the $1 Million Margin Club and get this script for free. And I'll talk about this right now. This is telling you the average on a 1 minute candle that this volume is. So over a 10-day period, every 1 minute candle has 116,000 volume. And right now, today, it's 139,000. So if you open up these a scanner right here, you can see a custom scanner that I coded that is picking up all those, and it's coded right in here already. You can get this over at the $1 Million Margin Club. I'll have a link to it. Also shows you the percentage from the high. And this helps us find the stocks that we're going to trade every day, every morning, and then I'll mark them out based on that. I also have one set for, I move them to a watch list. Here's a watch list that's set for just 50,000 per 1 minute. So it'll have more stocks and different stocks. Sometimes we'll go there. This tells you if you can't borrow it, if you can't go short. So both of these custom indicators are over at the $1 Million Margin Club. And so both of those scanners, I should say, are over there. So I have it all coded in here. And you can do this stuff yourself, guys. It's just $4.99 over there. So why not? I'm not selling them now. They're selling them. They bought them from me. So go make money. Let them make money so they buy more stuff from me. How about that? So here is the day chart, how I have that set up. And then over here is a 5 minute chart. Now this has, like I showed you, it has the other half of this, so I can quickly glance over. This is a trend indicator, which is really helpful. Right now there's no trend because we're just consolidating across, which is really good for the style of trading that I like to trade. I'm trading a consolidating stock. We're trading like the RV strategy. We're in day trading volume 1. We want the stock to just be moving along like a snake. And then we get the highs and the lows. So we're very low risk that way. We don't want one shooting one direction or other. Now, you may guess that right. You may have the data to guess the probability to take out the word guess, to ride that correctly if you're that skilled. And you may not. And you could go against you at any time on a trend. So trends are not as, you can't count on them as much as a consolidation. Boring stock that moves, a couple of bucks a day, and you're trying to catch that with your share size up and down, and you're slowly filling your bank account full of money without any high risk. That's why that whole strategy was invented. The RV strategy was to have your average trader have no risk, well, not no risk, but, less risk. So this, I always want to see this white, and this will give the strength of the trend. So you'll see that on a 5 minute chart. And then this is giving you the overall market breadth, really. So the QQQ, the SPY, the bonds, the fear, this, I have it on a 5 minute chart because it shows what people are looking at on the 5 minute. Right now, the SPY's down on a 5 minute, but on a 15 minute over here, everything, so they're all up. So having those on different levels is really helpful. Just so that's pretty much rounds out what you'll see my layout when you watch me trade. You can watch me use these indicators if you want to get used to them, if you're new here. And they really just help me call out the trades. For the most part, I run at about a 90% accuracy. And they really, I don't think I've dropped below 80% in this entire month and last month as well. So they work for me is what I'm trying to say. They work for me. I'm not charging anything. It's free to come and watch me. Okay, so you can just find out for yourself. What will make me happy is if you start making money and you're giving me feedback and letting me know that this is working for you. That will make my day. Okay, guys, we're going to go right into the recap of what's going on, and it'll come probably to an abrupt end. So at the end of the stream. We won't have my goodbye, so I'm going to say goodbye now. Thanks for joining in with this video, and I hope that you go green and you learn to trade if you're new, and this can make a big difference in your life. That's what I'm hoping, guys. So I'll see you down the road. I hope I see you in the morning. Go green out there. Hey guys, so we're going to start the recap here. I've kind of covered my picture over the live trading picture, same day obviously, and I'm going to be jumping in here to talk as you see the price action. But I'm leaving this sound on so you can see the beginning of this trade. So you'll hear me talking under my picture here, and we're going to start live with the market here. So we're just going to wait. We got 20 seconds, guys. Good luck. Everybody's here. Here goes our bell. There it goes. It's going to do this. It's going to break the breakout up there. Here's our 30-minute breakout, high and low. So I'm going to take us right to the trade now. So here we go. I'm about to go in the first trade here. Try to get in. A little risky on this move. Still could go down. So we're still on the first 1 minute candle here, and it's hurting me. I talk about how you should never trade the first candle. Couldn't help myself. Couldn't help myself. Still thinking we may have a play here. I didn't wait for the breakout. That's why I'm saying like I couldn't help myself. I looked at the price action and it seemed like it was going to go up. So that was good. So now I've switched stocks now. We're starting to trade a little bit on Tesla. Typically I like to wait a little later to get some consolidation, but we looked over at the 5 minute here and we saw that it was just going straight up. So I thought I might be able to trade this long bias and looking for short retracements and get in long and just get out for just a few cents each time. A dip if it goes down at all. I'll try to get a dip here, guys. Nope. Need something below 354 for sure to try to get a dip there. There it goes. All right, now I'm in it. It's actually quite a lot of shares to go in it. That's my half position to begin with. I didn't adjust my shares, I just realized. Got to wait this out for a fairly big move. See if we can get it back up over 50. There we go. Can I get that? Didn't give it to me. That was like a $30 trade. Oh, there we go. Wow. 100. So we got that first trade, and here comes another couple. Oh, the 53. Well, a little bit more than 97. Yeah, get down into the 70s and 80s down there. I lowered my share size. Oops. I knew that was going to be 90 something. It's not what I wanted. Tried to get out at 20 cents, so that was good. Got up to $50. So again, I'm going to look for a dip down here. You can see the key is just getting a few cents. This is giving the target range over here, right? And as soon as I get in a trade, you'll see how many pennies I am up or down, you know. So right now, the target going up is way higher than the target going down if I were to short it. You look at the meter. So I'm looking at all these things, and I'm looking at the whole and half dollar and the market magnet, much like I was just explaining to everybody on the analysis. So you're just looking at overall chart alignment. I just take in everything, and then I also look at how it's moving here, up and down, swaling. How many pennies can I expect to get? This has got a 10-cent spread, and you can see here how fast it moves away from here in just a couple of levels. 16 cents here. This is more than enough for me to make a quick swale, like a quick buy, get out, or sell, get out, sell, get out. So I go long or short. Here's the next trade. There, it's a better dip than before if I get it 75. Lower share size, have a cushion. That's my price right there. Chance. Just going to play the dip and go long biased here. We don't have a real consolidation yet. So this is sort of a catalyst bias type of trade here. You can see up here, meaning it had news, and I'm buying dips and playing it long. There we go. So that was another one. We got this up to 79. Fast forward a little bit to see, watch this spring up, came back, buying the bid right there, trying to get into that dip. To the 50. Wow, can I get that? Oh, nice. I got that. 84 cents. Took me 2 times to fill that. 50 shares. Come on, guys, do better. Market makers do. So I got in the next trade again on a bid. This time is at 87 cents. There we go. I'm looking at the ask to see where I'm at here. I'm at 87 cents in long, 353.87. Hoping this isn't a big drop off here. Got it down to 50 shares, just 50 shares here. Looking for a spike to get a little bit more than 10 or 12 bucks. It was up there into the 54.40 range just a second ago. But the way it's starting to consolidate, I may want to take a lesser gain. Yeah, that's what I was afraid was going to happen. It's kind of dropping off a little bit, so I kind of want to get out of this trade. I've got a nice cushion, but I'm going to try to get out on any kind of a spike up here, because now it's starting to fade. Yeah, not good. Let me just take a quick look to see if I want to add on the way up. 12 cents, 20, what's it swaling at? I'm looking at the level 2 now. It is not showing me love. There it goes. Yeah, finally. No, I'm not going to add. There's the MACD. See the MACD? Early on, I had a nice $20-something profit. I got greedy looking for it to get back up here, but I really should have taken that was I don't know what that was, 40 cents or something. I got it up there pretty high, and I didn't take it. You don't necessarily want to go for the entire target. So I'm pretty sure this trade goes against me. I got greedy, and I could have gotten out for a lesser loss here too. But you just don't know. That's the problem, and anything can happen. I respect that, and that's saying it's not going to keep going up. So I'd like to see it push that. Yeah, that was not good. MACD, remember how I said how accurate that is? That just got me very, very worried. Take a hit here, guys, and just to get out of this trade. Too many red candles. 5-minute red. I'm just going to get out. All right, that's too bad. The market gave me a bad thing getting out too. Yeah, not only did I get out, but it actually slipped against me there to even worse position than, I think it added like 15 bucks because I got market quickly to get out. So that was ended up being a pretty bad trade and a sobering trade for that there. So I'm entering another trade here, and I'm not sure why I took this trade. We can get into this move. I'm going to go ahead and get in there, guys. I should have waited for this to dip more. on, show me a recovery there. We need another green candle. You got 30 seconds to go green. I'm looking at the clock up here. There you go. Come on. Still thinking it was going to burst up. Not good. It's going to hit me. I got to get out. 2 bad trades. That was another bad trade, and I've switched over to Apple now. I'm liking the way that it has been consolidating, and we have a couple of fib levels to go off of here. Remember, I talked to you about the importance of those fib levels. Even the 5-minute shows some stop and consolidation. So we're early in the day right now. Really, we're only 20 minutes in. But look at it between the market magnets. So this is a much better stock to trade than the way Tesla was starting to trend a direction. This started to go down, but now it's stopped dead, and it's, it could really give us some good action. So that's why I started to trade this. 91, anything in the 80s? I'll try that. Get me. Okay, so I got in at 89, hoping that that's just a slight dip there. You can see that we're not going to get much on the green side here for money. I tried to get it 01 there, so that would be like $11 if it picked me up. Just a small trade, yeah. So small. So I had another trade. Now I moved ahead, looking for a better setup. We're about to take another trade. Definitely just shows going up here. Just the volume's higher on that than the last. I'm going to go ahead and go in there, guys. I got it at 65 even. Looking for it to continue, a continuation upward. Oh, we don't like to see a morning star, evening star happen right there. There it goes. You're not reversing. Don't even pretend like you don't want to reverse. Let's go. Go, go, go. Up to 230. Hitting the 230. Let's go. Remember, stick to your max loss, guys, and then you'll be fine on your accuracy. $0.50. I want 50 cents to absolutely stop this from going down. So I look at my levels to get out all the time in case the price action goes against me. I just tried to straighten up the screen. Rickshaw man, looking like we want to go up here. So. Man, it hits that 75 and it just stops. You gonna pass it this time? 75, 76 now on the ask for a second. It's hard to get a decent trade here. You just get out. Definitely hit that at the wrong number there. I wanted to hit it for $11. I think I got it for like $8. That one was good. Moving on to the next trade now. I got a better entry near the 50 cent for it to go back up, but if it keeps going down, then that's we've got a fib for support, we've got the market magnet for support, we've got historical data here. That's what I was about to say. This guy's good. That's a lame right there. Okay. Well, that was a level I wanted it to break, but that's decent if we get that trade. There we go. So we're up to 59 there. Look at how it's just stopped dead right here, huh? Did a good trade there. Looking forward a little bit for another dip down here into the 50 cent area. And just thinking it's very long biased. You can see how the target's gone down quite a bit because of all these. So the average has dropped quite a bit for how much I should go for once I get in. Yep. It was 56 cents. 52. Okay, I'm going to grab that. 54. That was a bad entry, but let's see if it's going to go back up now. You can see here how many pennies I'm going for here. Red, right? Should go for about 8 to 10 cents here. a little bit below the target.
Nope, 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 nope. Don't break the 50 cent. Don't break the 50 cent.
It's this line right here.
Stop that. We need a green candle. I'm just going to get out of this trade for a short.
I'm sure I'm thinking if it broke the fib, I should get out. So
there it goes. Come on. I thought 54 was a good entry there a second ago.
These are all reversal signs, so it did reverse. Candlestick pattern playbook, guys. That'll help you figure out what these candlesticks are saying.
Holding for an upward move. Here we go. Let's get another 10, 15 bucks here. We're at 54, so let's look into the 64.
Now they're about to put out a new version of that.
That's like 65. That was good. Up to 71. So I got out quick just because of what's been happening here, but
so ended up a good trade, going back a little bit more, waiting for that redip back to the 50 cents and about to get into it again.
So as that looks like that's going to break that, go down to that fib. I'm going to get in there, guys. 51. Should have been 50, but playing that dip with the fib as the backup. Fib is the support here. We also have the 20 here, but we just broke the 9 and the 14. So again, very conservative. Hard to lose money unless you just don't get out when it goes against you. And the fib is sort of like I don't want it to go past that or I'll get out. There we go. It's going to spring back up, give us some money here. Just baby steps. Try to get out for some baby steps. Try to get out for 10 bucks. Yep. I got out. All right.
So I just got in again. Oh, and got out.
Just a tiny trade. I see a 20-cent channel. I don't think I want to go more than 10 cents, which is what it's saying. So 8 to 10 cents is what you go for on the long.
So when I trade every morning,
12 cents on the short.
You know, this is what you can expect to see. I'll call out the trades how I see them, and then you guys can do whatever you want.
Going short there. So let's see if it's not going to make a big leap up to the $30.
Yeah, that's near the high it's been.
Away,
so
$21. I'm going to do market on the get out of the short. I'm just going to do it now. I got out for $5. The price action showed it continuing to go up, so I got out.
I looked at the level 2 for that.
Let's see. We're at the top of the market magnet. All right, you have the.
So I got in again at 229.94. So I did a short because we're right at the top here, and I'm doing it off of the 230 level. I'm expecting a pretty big rejection here off that level. Usually on the whole dollars when you're near a high, you also can get a breakout, but with the fib right there, I figured I could get a rejection and then make money if that happened. Maybe have it at least pop down below my position there. So we'll see.
Yeah, somebody emailed me and said I was really green yesterday. I just did the opposite of everything you said. Well, isn't that a confidence builder? Thank you for that email. People, just stick a knife in me. Here we go. So we broke 100 there. So you should have made your goal if you've been.
So I went over and verified that we already had $50 on another stock, and now we're back to taking a trade right here. As you can see, I'm pushing the button on this dip. Now we're going back up. We went down. Now we're going back up off this 50-cent level, very close to it.
Go ahead. That's a little higher than I wanted.
60 cents.
So I got it to 60 cents, which is a little higher than I wanted. To go long, 229.60. Not going to hold it past the fib. I'll take a hit if it keeps going down.
Again, I'm always looking for the level to get out.
Pretty strong. So
just in case.
A second more. 47. And this needs to turn around at this fib here. There it goes. Okay. Show me some love here. Nope.
I'm getting ready to get out.
Do not break that fib.
Keep your losses tight.
Finally, I see some price action I like coming the other way.
I don't always follow my advice, but you should keep your losses very
See if we
tight.
can jump all the way back up in here. Let's get up in here into the 80s. That'd give me a 20-cent, $20 trade.
Oh boy, long day already.
It's right at my position right now, but it's showing signs of recovery. You can see here, that's momentum. Now those are both momentum indicators that it's going. And you can tell from the target, it's like it's a real battle going on right here. Then when you see that, then you look at the Scalp Pro and say, what is that saying? That's much stronger down than up. I mean, look, we're talking real low money here to just wait it out a little bit and see what's going on. No reason to panic. We just wait for the move. We're not trading 1,000 shares, and this price action is moving within like 6 to 12 cents. So you're not really in a big danger unless you get a huge flush. You can just get out. I'm counting the fib to where I want to get out if it breaks that fib going down. This is good news here. Market magnets information above my position. Pulling down the magnet's not good because it stops it from going up, but at least it's above my position when it would first started doing that. So, but yeah, you can see that when that magnet came down, it turned it around. So I probably should have just got out right then. I do respect that market magnet, and once again, it proved to me that you had a good trade for a small amount and you didn't take it.
You can see up here, I just only a penny
We don't want
down.
this price action to recede. We want this to come in here.
I'm letting you guys see the whole trade here.
This is reading really short-term price action. That's scalping. How do you read it? You read it off historical data. You want to see if things are going to repeat, and then you read off of current price flow, and those are really the two. And then there's different ways you can get that information, and that's what people will argue about sometimes. But so that, unfortunately, is a bear flag. And there's the pole. Here's the flag. If this turns red and indeed breaks the fib, it's more confirmation that you want to get out of the trade. I want it to break the
Guess
flag
I'll
here.
zoom ahead and see where we end up. You can see I got out of the trade here. And I think I'm about to switch stocks
And there it
here.
goes. Then it takes off. Okay. But I wanted to get over to Tesla, actually, and take a look at what we got over here.
I'll let it roll a minute so you can see my assessment here.
Oh, it's not doing what I needed to do here for some reason on my chart.
So I got into a long here at 152.19 after giving an assessment of what was happening here and looking at the overall indicators.
All right. Let's see if we can get back. I think we were over $100 on this stock at one point, and then I blew it with a couple of trades. Really? You're going to do that to me now?
This started to consolidate, so it looked interesting.
What's the deal?
We're not looking for swings. Remember, we're looking for consolidation with maybe a bias, a certain direction, that's slowly stair-stepping.
See if we can break that 50 cents, and then I'll hold it past it if it can break it, and I'll hold it for a bigger move. And there it goes. It's at 45 over here. Market maker's right there. I could take a baby trade and be happy with a profit, but I'm thinking about holding it long biased a little deeper into this move. If you really break the 50 cents without rejecting, which it is, so that's good. So let's hold this up to the 53. See if we can get it up to 53. Anywhere in there, I'll take it. Looking for $53. Don't reject. Come on. It did reject off the 50, so now you got to be careful.
Watching me trade is so exciting.
It's hovering here so much, guys, and I'm thinking about taking a 2-digit profit up there.
I like trying to
There
guess
we go.
what I would do when I watch it again. Is it any different than what I actually did? And it's pretty much
Goes
exactly
up, but price
the
goes
same
down.
thing.
A nice, big, solid, fantastic candle that's reversing on us here. I might add to the position down here.
Yeah, I was just thinking that,
It
dude.
starts to reverse back up.
Again, this guy's pretty clever.
100 shares up here. I like its upward swale still. Here's our first 5-minute red happening. But look at the strength of this. The fact that it's already been up there already is good news. So this would get us up to like over $200 for the day if it got up there. So it's tempting. 78, 88. I'm gonna take that if it picks me up $85.
So that ended up being a pretty decent trade there. So I just got into the next trade here. It's 152.80, riding it up still.
Get it? I got it at 80 cents. I'm expecting a possible retracement down here. I'm looking for this to break 100.
I didn't want to miss it going up. Really, it seemed like it was just going to keep going up. You look at the 5-minute.
We have a nice solid green day here. If that happens, don't count the cart in front of the horse. The horse in front of the cart. Whatever. You chickens before they mate. It's like the puppet master said, he's gonna sell. He's gonna sell. Turn it around quick. Don't let him get picked up. He's trying to sell. Don't let it do it. Okay, everybody's on board. Don't let the professor have a successful trade. Do you guys all understand? We're with you.
I remember being annoyed by this trade. that it stopped.
Just a few minutes, guys. I got a bug out, so I'm hoping this is a good trade.
That long time ago,
Now it sounded
3 hours ago or whenever it was. It's like,
don't like the rejection. That's an even dollar rejection, which scares me.
yeah, it shouldn't have happened. It's just they were not listening to me. That happens so often where they just don't listen to me. What are they thinking? I don't know what they're thinking.
Rejected down an entire dollar.
All I'm saying is, Mom's going to hear about this.
Here we go. Come on. I see a price action going up. Oh, I'm way over here. That's my price. I'm still in here. I forgot I had a price for a second. Yeah. So that's a 33-cent trade if I make it. Way above the target. Which is probably why it didn't pick me up. Here we go.
31 cents. I can't add. Here we go. Yes. I predict this will be a good trade.
To get to I was watching the money more than the price action when I took that trade because I'd be picked up already.
I'm going to go out on a
Here
limb.
we go. You made a little tiny bull flag.
And I'm going to say this is going to be a good trade.
The flag by breaking this.
Write it down.
You have 51 seconds to go, and then you will shoot up to 350, 350.
Uh-oh, MACD just showed me.
Told
That's
you
not
your
good.
future. Don't listen to the MACD. It's not right this time. That's right. It disappeared. It had no confidence to stop you. Here we go. And we broke
Hey,
the
broke the $100.
And there it goes. And the crowd went crazy.
Yes!
Hopefully you guys are doing good.
Okay, guys, so that was it. We ended up well over $200 and had a good day. Our 150 was what we were going for, so I hope that was enjoyable for you guys. So I hope I see you soon, if not tomorrow morning, sometime soon, depending on when you watch this video. And we can scalp together, and hopefully you can make $100 a day, $200 a day, $500 a day. You can make a difference in your life, guys. So thanks for tuning in, and go green out there.